This August, the U.S. Federal Deposit Insurance Corporation, or FDIC, issued letters to 5 different cryptocurrency companies demanding that they cease and desist from making false and misleading statements about FDIC insurance. This had a lot of cryptocurrency companies asking just how FDIC insurance works, and it has a lot of FDIC-insured banks asking, why are cryptocurrency companies talking about FDIC insurance, and what are they saying? I happen to regularly represent both FDIC-insured banks and cryptocurrency companies. So today I want to try to clear up some of this confusion by discussing FDIC insurance, why the FDIC is upset at these cryptocurrency companies, and what both FDIC-insured banks and cryptocurrency companies can do to make sure that they stay on the right side of the law. FDIC deposit insurance protects customers of FDIC-insured banks in the event of the failure of the bank. It generally protects the account for up to $250,000, and that's per account holder, per account deposit type, per financial institution. But not every financial institution has FDIC insurance, and not every financial product is FDIC insured. And because of that, there's a potential for confusion. So there's something called the FDI Act, the Federal Deposit Insurance Act, that puts limitations on what institutions, and in fact what anyone can say about the nature of FDIC insurance. It prohibits people from saying that a financial product that is not FDIC insured is FDIC insured. It also puts very strict technical limitations about references that can be made to the FDIC in a company's advertising materials, including their web page and even the name of the company itself. The FDIC claims in the cease and desist letters that were sent out to these 5 crypto companies that the companies made false and misleading statements about FDIC insurance. They claim that there were false and misleading statements made suggesting that there were crypto-related financial products that had FDIC insurance, which there was not, and that there were stocks held in brokerage accounts that were covered by FDIC insurance, which they were not. The FDIC also notes that one of the companies actually registered a domain name that suggested an affiliation with the FDIC, when in fact the company had no affiliation with the FDIC. The FDIC claims that because these statements were false and misleading, they violate the FDI Act. One interesting thing about the letters is that some of them are targeted at journalists. And that is because any person that makes a false statement about FDIC insurance coverage applying to a financial product is covered by the FDI Act, not just the issuer of the financial product. So that means that the FDI Act can be used against newspapers, against journalists, and even against commentators like me. Usually when I talk about the roadmap to compliance with financial regulations, I explain that it can be a fairly complex process to ensure compliance. But in the case of the FDI Act's prohibition on false and misleading statements relating to FDIC insurance, there's one easy way that cryptocurrency companies can ensure compliance, and that's to just not talk about the FDIC or FDIC insurance. For most cryptocurrency companies, when you're explaining the financial product that you're offering, it's not necessary to talk about FDIC insurance. But there are some cryptocurrency companies who do feel a need to talk about how the FDIC insurance relates to the product that they're offering. And those companies should talk to a lawyer. And good news, I'm a lawyer. So if you do have any questions about the FDIC or FDIC insurance, feel free to give me a call. I'd be happy to talk to you.